Hey everybody, Dennis Wilborn. It is the last Friday of January 2022. You're going to want to watch today's video all the way to the end because I'm covering two of my special indicators that are flashing potential big buy signals that we want to walk into next week on the alert for what we want to be buying. Again, we'll see how it works out, but I'll be covering that prior to the end of today's video. Along with our stock picks and a couple of other tricks that we have up our sleeves. So let's settle down and get ready and get going right now. Hey, good afternoon, everybody. This is Dennis Wilborn, the Active Trend Trader. I want to welcome you to How to Make Money Trading Stocks and Options. And plus, we'll be doing a couple of trading tips. I hope by the end of today's session, you'll be sitting there going, maybe we're finding a bottom. And or at least you'll be thinking about it and knowing what to do to be ready for when it's time to start jumping back into this market. I want to say hello to our stock pickers today. Steve, how are you?
Doing well. Yourself?
I'm doing well. And Neil, always good to see you.
Doing wonderful.
And so I think all three of us are basically pretty flat the market right now. I know I am.
Same here.
I am also, yeah.
I had I had a good trade going with SQQQ earlier in the week, but we closed that out for a really nice profit. And then I'm trying to be very nimble. And as I said earlier, I hadn't got on the recording yet, is that it may be time to start taking a couple of nibbles on great stocks or do ETFs. But if it leaves a bad taste in your mouth, spit it out immediately. You want to jump out of it and say, hey, we'll come back and try again. Because that oftentimes happens when the market is doing a big correction like it's doing. So let's take a look. So we'll start your week with a review of how to make money trading stocks. Here's what we'll be covering. And if you are joining us on YouTube or a live session, hey, please invite your friends and you YouTubers out there, please leave a comment down in the comment section of YouTube. You can find the connections back to the Active Trend Trading site if you would like to get the free weekly watch list. I'd really love that. But the algorithms over there on YouTube, they perk up when you either leave a thumbs up or basically leave a comment. So if you do, please do that. I appreciate that. And the crazy algorithms. And so let's take a look at what are we looking at this week. Well, one is I still agree with Peter Brandt here. I'm leaving this up here for a while because now's the time with the market correcting to sharpen your saw, get ready to trade so that one, you can identify the stocks you want to get into and or the ETFs you want to get into. I've got a couple of stocks today. I know Neil has got, I think it's either a stock or an ETF. Steve's still holding out on us, guys. He's not going to tell us what he's going to be trading. And so
there are a lot of things I'm watching, but I'm not ready to jump in.
I hear you. So I basically have updated, pulled over the profit and loss statement going into 2022. And again, up slightly and, clearly outpacing the markets. One thing I want you to pay a particular attention to, and let me grab this, is this number right here. What does that tell us? That tells us that the small caps, the Russell, is in a what? A bear market, percentage-wise. And so we're looking for a place to bounce. And I'll be showing you some of the things that I'm looking at to help me determine when to get in. But we want to keep in mind, how's everything else doing? Well, as you can see, everything is down. The S&P and the Dow holding up a little bit better than the NASDAQ, but it appears that the small caps and the tech side of NASDAQ is kind of getting hammered a little bit. So let's take a look at let's take a look at the charts and see what we can see. And one of the things I wanted to do, yes, go there. Okay, stop it. Okay, let's take a look at the S&P, the spiders. We drew this box in here, this line of past support based off of these lows over here on the weekly chart. As you can see, we started to turn up. A couple of things that are of concern on this chart, for me at least, is that one, we have got we're breaking out to the bottom side of that. However, we're getting a rebound. So that's positive. So buyers came in. The momentum, though, is on the weekly chart is still heading which way? Down. I had a really good time talking with Floyd Dameron up in Alaska. He's a IBD meetup leader, and he does a lot of ETF trading. And he was explaining his system, and he was saying that even though he may get a signal like we're having over here on the daily charts that momentum is turning around, before he starts to buy in, he wants to see his weekly momentum start to shift. Now, it doesn't have to shift all the way back around, but it needs to be shifting. What are some of the other things that we can look at on the SPY that we need to be somewhat concerned with, I think? Let me grab hold of that. And one of them is this little number right here. This is the, this is the 200-day moving average. I'm going to go ahead and grab that 200. I'm going to increase the size of it so you can see it. As you can see, price action is below the 200-day moving average. There's a couple of ways of interpreting what we have going on. One, this could be a huge flag type of formation. Here's the pole, here's the flag, breaks out the bottom and closes below the flag. We can look for a pullback down significantly, about another 40 points on the S&P. Will that happen? We don't know, but it would take us back down into past levels of past support. Interesting how that always works. But identify those past levels of past support. That's where we could get a next bounce. So as I'm looking at the indexes, I'm looking for, if we continue to correct and the sell-off continues, look for that next level of support where things could start to turn around. Right now, looking pretty positive for at least a relief rally. But the relief rally where? Back to the 200, or maybe all the way back up here to the this pink line here, which is the 20-day moving average. And that's usually when you talk about reversion to mean, you're expecting it to move there. The Qs, similar type situation, way below the 200-day moving average. Matter of fact, the 200-day moving average is starting to flatten out. So that becomes a magnet for a relief rally back up into that level. And interesting now, both the 20-day and the 200 are getting where they're going to be occupying the same space here shortly. So I'd look at a pullback up into that area. You can also look at it over here on the 40-week. Where's that? About 364. And so one has to make up their mind what they want to do. Do you want to trade the relief rally and pick up some coin on the way back to the moving averages? Or do you wait for the relief rally and then trade it to the downside, utilizing either the inverse ETF or doing some kind of option trade? Always a possibility. So that's what I've got going on that. Again, momentum still heading down. And I encourage you, if you use both TSI and the market forecast, go back over this weekend. And because it's also the end of the month, go back and see what happened the last time it broke down like this. how long did it finally take it to turn back around? And as you can see, a lot of times it takes several weeks for this sell-off to be complete. The other thing, and so let me look at the IWM, and then I'm going to jump into, as you can see, IWM. I wanted to show you this because it's kind of interesting, is I took the Fibonacci from this point to this point, extended back to there, and this line right there is the 100% symmetric move from here to here. As you can see, we overshot that and are starting to rebound and bounce back up a little bit off of that 100. I would pay attention to that because we've reached our extension here. And so that's oftentimes what I'll say to people is always look at the non-leveraged ETFs if you're going to be trading the leveraged ETFs, because here's what you've got going with TNA, which is the 3-time leverage of IWM. As you can see, there's a 100% extension. Now this is an exact number. You know, basically this is the range. So a little bit higher range there. Percentage-wise, it doesn't have that mark on it. But this is also looking like, hey, I want to reverse and pop higher. I also like TNA. Well, let me get back here to IWM. Excuse me, guys. I like IWM, the Russell. Look what's shaping up over here. A 3-line cluster on the weekly. And what happens when you get a 3-line cluster? Typically within 1 to 4 trading periods, you'll get a rally back up to the upside, but it can be from a lower level. So this could come all the way down, you know, heavens, down here to this level, or even this past support about 170. The other thing, remember, IWM, or the Russell, is in a bear market. It's down over 20%. So we'll see what that has to say for us. Steve and Anil, what do you guys think? Again, I'm not a buyer here, but it's getting really darn close to want to at least be a nibbler.
I pretty much agree. I think the situation is it's just uncertain. We could break down. I think the likelihood is we have a relief rally, like you term it, and then we'll probably have a test of the low that was made 4 days on Monday.
Yeah.
And until that happens and we see what the nature of that test is, I feel like the winds of the market would not be with you. But if we hold on that test, I would then become very bullish. I mean, not extremely bullish, but I would start to establish positions for the longest term.
And so now here's what Anil had mentioned. This is back to the Qs. We had a reversal day, a rally attempt here, but we haven't had a follow through yet. Anil, what would we need to have a actual follow through day?
I think if it closes above yesterday with a volume 1.2% or more,
okay.
I think it's not,
Nbda would say follow through day.
Yeah.
Okay.
I think you got to reverse the Anil. It's a 1.25% price increase with volume higher than the day before.
No, you're right. Yeah.
So for today, the market's got some work to do.
Absolutely.
to provide that. What are your thoughts on the indexes, Anil?
I think basically I agree with you. And on my system, all indices have a sell signal, and yet has not reversed. So we'll see.
So we're going to jump into the picks for this week. Again, Steve had no pick, did not have a pick, but you want to hang in there because after we take care of the picks, I'm going to show you a couple of clues that you can be looking at that are also supporting a potential strong relief rally. So let's go ahead and take a look at UUP. Now, UUP, what is this, Anil? Is this an ETF or what?
I think it's an ETF. I'm not 100% sure, but it is US dollar.
Yeah.
Okay.
You're correct.
Idea here is I have a signal on it on daily, weekly, monthly.
Okay.
And that says if interest rates are going to go up, the dollar is going to get stronger.
Okay.
And that's the reason I picked it. We'll see.
Now, are you buying here, or are you going to buy it closer to pull back into support?
No, I'm buying here.
Okay.
And
okay.
We'll see.
So you're going to buy here. What's your now this is to give you guys an idea here. Okay. This move here, just give you an idea. That move there is about 2.79%. So it is a little bit of a slow mover, but it does also have weekly options that go with it also, which is kind of interesting. And I find sometimes and there may be a leverage ETF that goes with this also. I'm not sure. And so, yeah, it is an ETF. It's the dollar index bullish FD. Cool. So, yeah, it looks, it is, it's following a nice little pattern all the way up. Sometimes it's advisable if you want it, if you have to be invested. Sometimes it's a great thing to be in some of these, I'll call them, slower movers, or they're more gradually, but they're moving up and so it's, not a bad idea to be there as the sector rotation happens. So I like it. I have a question and answer. Oh, no.
I would also pay attention to interest rates, and the TNX, for example, is at a cusp. We don't know which way it'll break.
Yeah.
And I think depending on how it breaks, it'll probably affect UUP.
Right on. So, okay, let's see. Let me go. Yeah, if you guys would, please put any comments or questions into the chat box rather than the Q&A, because I don't pay attention to the Q&A, but I just picked up one. Most energy sector stocks are doing really great. Are you guys buying in the sector? I followed specifically every week. I follow XOP with our AutoPilot trading service for the leverage ETFs. And so if we have a signal, that's typically where they will come out. I'll cover XOP right before we close out today, if you'll hang around. And so thanks for that question. Here's a couple that I'm keeping my eye on, guys. One is our good old buddy Tesla. Now, Tesla again, it's at a make or break point. I'm not jumping in this right yet because I have not had a shift on my momentum, either daily or weekly. At the same time, though, I'm entering into a zone of support off the 200-day moving average. I have a 3-line cluster on the daily. I may push down a little bit lower. Even if I got down to 750, I would be, 775 to 750. That may be something to say, hey, let's go ahead and take a look at that. We know that Tesla's not going anywhere, but it needs to do a hard reversal right now. Again, but until I get some kind of a cross back up here on the weekly TSR or a break to the upside, not going to do anything. 2-line cluster on the market forecast. So that's one. Secondly, just in case you're wondering, is also keep an eye on Nbda. Again, similar type, the story's the same. Now, it may just, fall from the sky from here, but it's at past level of support. It may get some traction here and bounce up. Where would I trade it to? I would look for just a reversion to the mean, which is the mean I'm going to be talking about is the 20-day moving average. If you're taking a trade to the reversion of the mean, though, project down to where that moving average line is going to be to give an idea of where those prices are. And so Barry wants to know, Anil, What does your model say about USO? And well,
USO?
USO, Uniform Sierra Oscar. That's a US oil. So as he's
that is on an uptrend on daily, weekly, monthly, everything.
Yeah. That looks kind of interesting.
Yeah.
Looks like it's, but it also looks like it's in need of some kind of a pullback to my eyes. The other thing I'll be looking at going into the weekend, folks, is I'll be looking at the monthly chart and the weekly and the daily, but especially going back to the monthly. What are the monthly charts telling us? And as we go in and look, let's just pick up the cues again. That monthly chart is absolutely ugly. It also is turning down. Look at this MACD also rolling over. And this is telling me that with a big month down like we've had here in the month of January, the market could pull back up into the midsection of that candlestick, but that's where I'm looking for weakness. Where does that correspond to? About the, guess what? The 200-day moving average. So that's kind of interesting, but take a look at that. The momentum is shifting to the downside longer term. And so that could foretell getting ugly. Now that we've figured that out, I'll bounce over here and you guys tell me what you think about this. It is also, here's what I look at to, what about VIX? And as you can see with VIX, typically VIX will rally, and we did get a rally back up almost to 40. And we go back here and look, those are kind of coinciding with anything over 30 is where you tend to get a reversal. This is March of 2020, where we had our bear market. It got really high, then reversed down. We have a shooting star on the VIX. This could mean, okay, what just happened? Okay, this could mean that, hey, we are targeting or triggering that a reversal to the downside. And if VIX is coming down, that's typically meaning that the indexes, especially the VIX measures the S&P, that the indexes are going to be going up. So this is one place to look. Do I trade? Is this a trade signal? No, it is just okay, keep this in mind. Secondly, this is a chart that I absolutely, a lot of you know that I utilize this chart. This is percentage of stocks above their 20-day moving average. If you want a copy of this, let me just shoot a copy. I'll put this in the chats to everyone. I'll paste that in and I'll just get rid of the rest of this crap here. What does this tell us? Is that basically over the years, when this gets oversold, this is telling us that only 12% of the stocks on the NYSE are above their, in this case, their 20-day moving average. Normally when that happens, that is a precursor for a rally back up. Now, we don't know if we're going to go back totally into an uptrend or not, but a strong relief rally, definitely. And if you want to, you can go back and check this on a yearly basis. You can adjust the dates here and go back and validate. The last one we had was back here on December 1st. Did we get a rally from December 1st? I think the answer is yes. The next one before that was September 20th. Did we get a rally from there? Yes, we did. And then if we go all the way back earlier in the year, March 25th. Every time it gets below 30, that's my line of demarcation. And I wait for it, like right there, July 19th. And on July 19th, after July 19th, what did the markets do? And I'll just take a real quick look at that. July 19th, let's see. And that may be up here. Yep, there you go. July 19th. Didn't get a full pullback, but we bounced from there. What day is this? This is the 19th of May. How did that line up? The 19th of May, which is right there. Didn't quite get down to the 30s. But anyway, all those low spots, keep an eye on them. I know David utilizes this, and it is a good tool. But this plus the VIX, all they are is contribution type tools for you to put your clues together. So that's basically it. Do we cover enough, guys?
Yeah, I got one more thing. I haven't figured out what it is, but on MarketSmith, there's a blue dot. Then when there's the accumulation in the base.
Okay.
And there are 31 stocks are showing up with blue dot today. I haven't seen anything like that recently.
Wow. So what's the meaning of that?
It says accumulation in base. That's a good thing. They might break out.
Okay. Do my friends go to? Oh no, Mark. Mark asked a question. Do my friends go to Market Tech Talk to view the what's that? HTMMTS. Oh yeah. They can do that, Mark. I'm sorry. Or they can basically just go to the website, the Active Trend Trading, and if they just register and opt into the free service, they get the watch list and they get the recording sent to them every week. So okay, well we covered a lot, gentlemen. So hey Steve, if you have to give us at least one stock that you really, huh?
Look at Apple. I like Apple.
Okay.
They had earnings yesterday. We got a pretty good response today in a flat market. I like it. I think
Apple.
it may be getting ready to move.
There you go.
But the tell will be Monday. If we don't follow through to the upside on Monday, then it's probably going to pull back.
Yeah, I agree. Okay, cool. Yeah, momentum's really nicely shifting again. Yeah. And it even looks like the longer term momentum is starting to tweak up, but you've got a really darn good level of support right there at 155, which is evident last week.
Absolutely.
But I couldn't touch it. I couldn't touch it because it was earnings. I wasn't going to buy it into earnings.
Yeah, and I agree with that. I wouldn't have traded before earnings, but today I'm interested.
Okay. Well, that'll do it for the day, guys. Remember that all the materials we do present is for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital, and just be patient. We are getting to be patient in 2022 so far. And I was doing some studying, I'll leave you with this final thought, is that there's an old wives' tale out there that as the market goes in January, so goes the market for the rest of the year. And the fact of the matter is that is not an absolute accurate statement. That, in a matter of fact, it is only accurate about 40% of the time. That 79% of the time the market is up at the end of the year, even if the market is down in January. And normally the market is not down in January, but it's not a precursor to be able to predict anything.
Dennis, one quick comment there though. On the monthly chart,
if
it doesn't change a whole lot by Monday, it'll be the ugliest down month on your chart.
I agree wholeheartedly. So, which brings us back to trade the chart that's in front of you.
Right.
So, Anil, you got anything else, my friend?
No, that's about all.
Okay, well, everybody, thank you. Thanks everybody for joining us. Aloha, God bless. We will tune in. We'll hopefully have this posted up sometime tomorrow morning. We'll see you.
Take care. Bye-bye.
Okay, bye.